What are the taxes like for retirees in Hawaii? Well, stay tuned to find out. Welcome again to another edition of the Heritage Wealth Planning YouTube channel. So happy you're here. Today, we're going to go into Hawaii state income taxes, sales tax, property taxes, the whole litany of taxes you as a resident will pay in Hawaii. So let's go ahead and get started. Let me minimize myself. Let me cancel out this guy. And as is our want, we're going to start with Kiplinger's, the state taxes, the little map that they have here, and they go state by state with most tax friendly in the green to least tax friendly in the blue. And Hawaii is down here. It looks like light green, which would tell me is tax friendly. All right, so that's surprising to me. I got to tell you, I've been surprised a lot of times in this state by state episode here. So this is actually very helpful to me as a financial planner. You're getting some out of it as well. If you want to read or hear more, don't forget to subscribe to the YouTube channel, Heritage Wealth Planning. And don't forget to hit the little bell icon there to be notified of future content for sure. But this is Hawaii. So let's take a look at what Kiplinger says. Be interesting. The Aloha State is known for its high cost of living, but it can be a tax paradise for retirees. It just boggles the mind. I would not have thought that until I just read this right now. It exempts Social Security benefits as well as most pension income from state taxes. But if you have other sources of income, Hawaii will tax that up to a top rate of 8.25%. Seniors can get big dollar exemptions from property taxes. They vary by county, but keep in mind that Hawaii housing values are sky high. State sales tax, 4%. Hawaii employs a general excise tax that applies to a wide range of goods and services. Prescription drugs and prosthesis. Sometimes I'm from Maine, my friends. We don't pronounce the English language as well as you folks maybe in the rest of the country. Prosthesis. Oahu has a county surcharge of 0.5% to pay for mass transit system. Oh boy, making the average combined rate 4.35 as calculated by the Tax Foundation. And we're going to get in the Tax Foundation here in just a moment, so stay tuned. Complicating matters further, the tax is calculated on the vendor rather than the buyer. Which means consumers pay a few percentage points more in practice. Yeah, that's a VAT tax like they do in Europe. We don't want a VAT tax. I'm telling you right now, when they put it on the vendor as opposed to the buyer, it just leads to a lot of shenanigans that can come into place for sure. Income tax, 1.4 on taxable income for $4,800 for married couples. We've talked repeatedly about taxable income, but if this is your first topic here at Heritage Wealth Planning YouTube channel, remember, my friends, a significant difference between gross, i.e. adjusted gross income, AGI, and taxable income. Just for the record, if you're married filing jointly and you're over the age of 65 via the new federal law, i.e. the Trump tax bill of 2017, the first $26,600 of your income is essentially tax-free. So basically, it takes you up to $26,700 of income before you pay any taxes whatsoever. So bear that in mind. Let's just say $27,000. So anything above $27,000 is where you start paying tax at 10%. So if you make $27,000 of AGI, your taxable income is only $400. 400 times 10%, you're going to pay $40 in income tax. So just keep that in mind. A huge difference. Gross income, taxable income. Gross income, taxable income. Okay, it's critical to understand the difference, my friends. 8.25 on a taxable income of $48,000. I don't have my trusty calculator here. No, I do not. We had people over for Memorial Day and my oldest daughter's graduation, and I guess I moved that on. Oh, there it is. Hold on a second, my friends. So taxable income of $48,000, which means you need to have. All we do is we take $48,000 for married couples, 26.6. You would need to have $74,600, if you can see that, in gross income before you pay any taxes to the state of Hawaii. On married couples filing separately and individual filers is $96,000. So essentially no marriage penalty. Effective income rate is 6.5% per individual, 7.1% for joint. Social Security benefits are not taxed, so that's good. Exemption from retirement is other retirement income, railroad, of course, and military. Federal, state, and local pensions are exempt. All out-of-state government pensions are exempt. Also, Private employer-funded pensions that employees did not contribute to are exempt. Okay, that's most pensions. If you did not contribute to it and you have a pension, by and large, is exempt. Distributions from private employer-funded pension plans received upon retirement are partially taxed by the state if the employee contributed to the pension plan. Most pension plans you do not contribute to, so that would not be that would not have any impact on most people who have a private pension. So that's good. Let's see. IRA distributions are fully taxed as funded by an individual rather than an employer through a rollover from employer plan. All right, so that's confusing to me. So IRA distributions are fully taxed if fully funded. All right, so basically, if you're contributing to your IRA, you're going to pay full tax on the money that comes out to the state of Hawaii. If you roll your IRA over, 401k over from an employer's plan, or what's called a qualified retirement plan, or ERISA, well, some of that's your money, some of that's not. So I'm not sure how that is. Okay, so here we go. Distributions are taxed if the employer provided matching contributions. However, part of the plan is considered to be employer funded and not taxed. Okay, so that tells me that the employer amount that the employer put into your 401k is not going to be taxed. And if you subsequently roll that 401k over to an IRA, you're going to have to keep pretty good notes to determine how much of that was employer matching, employer contributions, i.e. profit sharing, and how much was your own contributions. That sounds like a pain in the butt, to be honest with you. So, and you think about it, if you put 10,000 in and they put 15,000 in, and now your 10,000 had grown to 20,000 and their 15,000 had grown to 30,000, you're just going to have to keep those percentages to determine how much of your distribution is percentage going to be towards your contributions relative to your employer contributions. That sounds like it could be a pain, but hey, just frees you from paying a couple extra $100 in taxes. More power to you. Private pensions, again, are not taxed if the employee did not contribute. So that's pretty good. All out-of-state government, so government pensions are exempt. There you go. Now here's where they get you. Wow, okay, Hawaii. The median property tax on Hawaii's median home value. So the median home value in Hawaii, and remember, that's half of it is above, half of it's below. We don't care about averages, my friends. We care about median values. So the median value is $528,000, and the median property tax is $1,400. My friends, that's low. That's 0.25%. That's significantly low. I just want to make sure I'm reading that right. I am. All right, we're gonna have to look at the tax foundation and see if they concur with that. But that's fundamental. These varies by county for tax breaks for seniors. In Honolulu, for example, homeowners 65 or older get a large home exemption of $120,000, and low-income seniors age 75 and older may qualify for an even larger exemption, depending on age. That's fundamental. That's fantastic. Excise taxes, vehicle taxes due on vehicle sales. Vehicles are also taxed by weight at registration. A 4,000-pound vehicle registered in Honolulu County would owe $200 to the county and $700 to the state. And that's not bad. Hawaii has no inheritance tax. It does have an estate tax, where the exemption matches the federal thresholds of $5.5 million per person. All right, so they have portable, which means it's $11 million per married filing jointly. And estate taxes can be quite high if you break that $11 million estate. Well, I'm stunned, frankly, about how that's just very favorable. I'm stunned. So, all right, let's go to see what the tax foundation says here at Hawaii. This is a good surprise of mine. I'm very glad to see this. They're going to get you on the cost of your home, but they're not going to get you on the cost of taxes that go with it. Top individual tax rate is 11%, which means they'd rank number 14. Again, we don't want to be in the top 10 or top 20. We're not college football. We do not want to be in the top 20. But then if we look at, state and local tax burden, tax freedom day is April 19th. All right, so I want to start adding a second part of this. That's income tax. So your income tax. Now, we just talked about, though, that you're going to get some pretty significant tax breaks in the state of Hawaii without having to pay any taxes. Let's just go back to that real quick, because I think this is important to understand. Income tax is notified, but it can be tax paradise. It exempts Social Security benefits as well as most pension and IRA distributions as well. If the bulk of your IRA distributions came from employer plans, you're not going to pay tax on it. If Social Security is pretty significant, you're not going to pay tax on it. If you have income sources, they will tax on other income sources, but that's, if the bulk of your income is from a pension, IRA distribution, and or Social Security, you're going to be pretty safe. You're going to be in pretty good shape. It's not going to be just 11%. Let's look at the sales tax. I mean, look at that. 4%, and the only average 0.35 for local. You're talking 4.35 for sales tax in Hawaii, my friends. That ranks in the top 5. Again, we want to, this right here, the lower the better. The lower the better. I got where they get you is on cigarette tax, and they hammer you on gas tax as well. But I mean, from a sales tax perspective, that's just phenomenal. So let's go to the chart that the Tax Foundation shows us here. I find this to be very informative here. How high are state sales taxes in your state? And so we're going to look at Alaska here, and 1.76 is number 46. And again, as a top, we want to be in the lowest to be the top, if that makes sense. And Hawaii is 45, the 45th highest, i.e. the 5th lowest sales tax in the union. And you got Oregon, Montana, and New Hampshire. They don't have any sales tax, but man, I'm stunned. I'm stunned by that, to be perfectly honest. I did not realize Hawaii would be that tax favorable. So kudos to them for sure. All right, so now let's see the property taxes. That's where I always am concerned by. Look at that, 0.29%. I'm stunned. So good job, Hawaii. I mean, yeah, you're paying a lot per dollar amount because the state is so doggone expensive. But I mean, my goodness, my friends, 0.29% is nothing. It's the lowest in the union. The lowest in the union. And yeah, you're going to pay a lot more relative to the percentage because of housing values are so high, but you get some significant tax breaks once you're a senior over 65 years old. So it just has to be said, from a pure tax perspective, Hawaii is just fundamentally superior. No other way around it. I want to show you, again, the state guide. All right, so a lot of people, myself included, would be surprised that California, Illinois, New Jersey, and even Hawaii are in the more tax-friendly, or at least mixed. But Hawaii is in the more tax-friendly, which is stunning to me, actually. So I want to point that out. All right, so we're going to wind this up with, go to smartasset.com, go to Hawaii, and what we do is our want. We look at Social Security and retirement account distributions. Now, this might be a little bit tougher to ascertain, because how much of that retirement account is from your contributions, how much from the employer contributions. Again, if you roll over, say $500,000, and $500,000 is all from your employer, it's all tax exempt in Hawaii. Social Security is tax exempt in Hawaii. If you roll over an IRA from a 401k, that's $400,000 your contributions and $100,000 your employer. 80% of that distribution will be taxed to you as income, as ordinary income. So let's do what we started with, $25,000. And we're going to say $25,000 Social Security, $25,000 as retirement income. We're going to say you're married, and we're going to say you're 1983. We're going to say you're born in 1953. 1953. And let's see what we get here. This will be interesting. Look at that. You pay $686. And I have a feeling they're assuming all that right here is coming from your own contributions. I don't know that to be true, but let's do $50,000 and hit enter. Yeah, so now we're starting to get up a little bit higher. Now, I still think they're assuming, so that's $2,300 state taxes to Hawaii, on $75,000. So that's, what's that? That's going to be about 3.5% or something like that. 2345 divided by 75,000. Yeah, it's 3%. All right. I have a feeling though that's not right. So let's do this. Let's do 25,000 here, and we're going to do out of pension, and we're going to say 25,000 just for simplicity. All right. Let's see what we got. And see, that doesn't make sense. I think they might be missing this. Let's do this. Last one. We're going to do 50,000 from a private pension. All right. Let's see what we got. Yeah, so 50,000 for private pension. You're still paying 23.47. Okay, now what's the last one? Bear me. I'll explain what I'm doing here in just a second. It's from public pension from the state government, whatever. Yeah, I bet it's zero. Yeah, exactly. Okay. It's zero. All right. So basically, what's going on here is the calculator is unable to determine how much comes from your contributions and your retirement account distributions, how much comes from your distributions on your private pension. So my thought process is they're assuming it all comes from your own contributions, and we just know that's not true. By and large, if it all comes from let's just assume this $50,000 is all a private pension or a public pension, and the entirety comes from the employer contributions, then you pay no income tax. Let's assume that $50,000 comes from all of your retirement distributions and it comes from all your employer side of the profit sharing plan and maybe the safe harbor contributions, or even a fraction comes from your own contributions. Your tax rate is going to be a whole lot closer to zero than $3,000 like it was before. All right, so lastly, let's do this. Let's say we got $50,000 Social Security and we got $50,000 on pension, and again, you pay nothing. So it really depends on the source of your income in Hawaii. My inclination is that this is going to overshoot how much taxes you truly are going to pay, simply because they don't know the difference between your contributions to your IRA and your employer's contributions to your 401k, which you then enroll into an IRA and are now pulling distributions about. Now, remember, if you have a Roth IRA, is irrelevant because Roth IRAs are 100% tax-free anyway, which is why you need to go and read my book, 21 Reasons Why You Need a Roth IRA. I think I might actually change the title. I haven't published it yet. I'm still working on it. But go to my YouTube channel on tax-free Roth IRAs, on taxes, and you'll see a whole lot of various topics on Roth IRAs and how they benefit you for sure. But I got to tell you, good job, Hawaii. I'm impressed. I think you've done great work here and very tax favorable for sure. So hope that helps, my friends. Thumbs up, always helpful. Thumbs up. Don't forget to subscribe, hit the little bell notification and comments. You live in Hawaii? What's your experience with the tax man? I'd love to hear it. So share your comments with us, and we'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.